Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, March 28th, 2012 is sponsored by Realtik. All right, let's get right into it. We have a nice sell-off on Wall Street. Dow is down 117 points, Nasdaq down 31.5, S&P 500 down 14, as the markets again show us the fact that the top is around this level and continuing to roll over. Now, what do I mean by this? Well, over the last 2 weeks or so, we've actually seen a top being formed in the market, what I call a rounded top. And this ultimately tells us that buyers are equaling sellers with little blips up and down. And that's why, again, you're not really surging to the upside. You're getting these pops, which is on positive news, like the Bernanke statement yesterday, where Bernanke comes out, on Monday morning and pumps the market up on hot air with nonsense about QE3. And then the markets, again, realize it's all hot air, and they come back in. And this type of activity, again, is showing us that the top is being put in this market, and ultimately we've positioned ourselves on that side of the market to take advantage of it. All right, now a couple other things to go over. What you have to remember is the classic nature of where the market is going. Let me just zoom out here. And again, really ever since right here, this is where the top began, in my opinion. And you've kind of chopped around, come back in, popped up again. You actually could be forming a little bit of a head and shoulder pattern if we come down a little bit further over the next day or so and then pop back up a little bit. You could have a shoulder here and the head right there as well. So that's something I will be monitoring very, very closely. But bottom line is, again, folks, Bernanke pumped the markets on Monday, and just literally 2 days later, you have negated 100% of that move. Here's Friday's close. Here's the Bernanke pop as we rallied up sharply. And it was a great rally, don't get me wrong. But again, just in 2 days, we find ourselves having negated that entire Bernanke pump. All right, and again, why would the markets negate that? Because they realize that fundamentally the economy and the global picture is not that good. And the markets are up 30% off October lows, and just since December alone, I mean, we've had a monstrous rally. You can't continue to pop or pump hot air into a balloon. Eventually, it's going to blow up. You just can't do it. And that's where you get bubbles from when this kind of stuff happens. So again, notice how the markets again had that monster rally, negated that. You're hovering right at gap fill support right here. If that breaks, you have another little bit of a level here. And then ultimately we could go back to last week's lows, which would be very, very significant. And again, that's where we start, right when we're down in this area, we start to look for a bounce off of this area to make that shoulder, the right shoulder, for a head and shoulder pattern that could ultimately tell us we're going to head much, much lower once we get that head and shoulder pattern to form. Looking across the board, with a lot of stocks red today, there are certain bright spots, and the bright spots, again, are in the strongest players out there. And I think this is so fascinating. Think about how a market is made up of multiple stocks, and there are certain stocks that are strong, and there are certain stocks that are weak. And when you look at the economic picture, the one thing that you have to note is how, even as much as Bernanke tries to pump this market up, he can't hide all the facts. And the facts come to you in stocks like Southern Copper. Take a look at the daily chart on Southern Copper. I mean, this stock is not looking very good. When the market has gone vertical like this, Southern Copper has actually fallen. And the metal stocks are the true definitive signal of how strong an economy is, because that's where demand is. If things were great and things were really growing out there, if China was strong, if Europe was strong, if the U.S. was strong altogether, you would see these metal stocks soaring. But you're not. And take a look at U.S. Steel, another metal company. Does that chart look anything like the Spiders Daily? Let me put up the Spiders Daily. Absolutely not. And then even if you go to Freeport-McMoRan, look at Freeport-McMoRan. This chart popped and topped out in, really late January. And that's when we feel the markets, again, the economy, the economic picture started to shift. Now, Bernanke continued to pump the markets up, which is what you got the next 2 months. 2 months more out of this based on the Bernanke factor. And again, that's liquidity, pumping markets up with POMO, permanent open market operations, where they basically are punching money into the system at record rates, and all those factors ultimately, including his comments and his words on QE3, QE4, QE10, QE20, QE100, and so forth. All right. Now, going back to a couple other stocks out there, we're seeing Apple hanging on its best. Now, Apple's, in my opinion, when this finally does roll, you will see a 10% plus correction in Apple very, very quickly. And I think it could even be starting now, to be honest, based on the extended move. Many people say, well, Apple's different. Nonsense, folks. Microsoft was the Apple, 15 years ago. with plenty of other stocks. Cisco was at one point the Apple type maneuver, trading at over a $500 billion market cap. I mean, you had stocks every kind of cycle. You have that one stock that is everyone says, oh, this one's different, and I don't care how different a stock is, and Apple's a great company, don't get me wrong. There is no chart that should be this parabolic without a correction. There's no chart. All right? And again, if you want to look back even further, I mean, look at that chart. I mean, just going back to 2009 lows, you're talking about a stock that was trading around 80 bucks. Now it's 600 and change. Amazing move. And we're not talking about a small cap. I mean, for a small cap to go up 6, 7, 800, 1,000%, all right, well, it happens every once in a while on great news because it's valued at 10 million market cap and it goes to 100 million. But we're talking about a company here that is now the most expensive company in the world, trading at over $500 billion. So, in my opinion, Apple's will or has fallen at this point or is in the process of falling off the tree. It might be rotting. You can use any analogy you want. Bottom line is it's at its point where it is going to turn and turn down very, very quickly. And again, it'll have big bounces along the way. Don't get me wrong. I mean, you're going to have a huge bounce off the 20 moving average. You have a major gap fill right here. That's going to be a big, big point. But I do think ultimately you will see the Apple chart come down to the 50 moving average. The 50 will be rising as well, but nonetheless, that is what I expect. JP Morgan. JP Morgan's been a very strong stock, and this is what I kind of was pointing out earlier in the video. Apple, flattish on the day, even though the markets are down big. JP Morgan, the other major player here, flattish on the day, just down 7 cents. You're seeing the most powerful, the strongest, still hold up, even though the rest of the market has turned to the downside. And again, those two stocks, the two stocks you should be following if you want to know when the market will really dump out, follow Apple and JPM. Because when those stocks go south and go south fast, the market will have no chance at holding up. Even today, I mean, you're still seeing a very nice sell-off. NASDAQ down 30, Dow down 116, S&P down about 14, basically 1% across the board. And again, I think the most impressive thing about today, the thing that you would want to note, is that the down move essentially is negating the entire up move from Monday. And again, the up move from Monday, I couldn't tell you how many bulls there were out there. I mean, oh, here we go again. The market's going to all-time highs, and we're going to go back to the highs from 2007. And essentially what I did, folks, I shorted the market right there and then. I mean, that's what I ultimately did. When that talk emerges, that's when you look to short. And my short level there that I gave out to Traders Life 24/7 was at 141.45. And we're now trading at 139.82, so I'm in the money very nicely on that trade, beautifully, in fact. All right. What else do we have to go to look at here? IBM, which was stronger earlier, was up about $1.50 earlier. Beautiful move to the 200 moving average. Pierced it, and look at the bounce. Technically speaking, that's a sweet trade right there. Even Apple on an intraday, one stock level I called out today was the 20 moving average pivot top when I was on the chat earlier this morning. This level right here was a buy. I took it for a buck on Apple on the long side for a bounce there, and then obviously second hit it goes right through and so forth. But you can even see this little pivot low from yesterday is actually holding up pretty nicely. Look at that. You pierced it there, but you've hit it ultimately right there and right there. Kind of cool stuff. What else do we want to look at here? Microsoft trading down 40 cents. That's a nice weakness there. Amazon topped out yesterday with a monstrous move. Great reversal towards the end of the day on AMZN. Today it's down another $4. Great reversal from yesterday's highs. It was trading at 210, which I had given out in the chat room as a master level. It's now at 201. I mean, think about that type of reversal literally yesterday afternoon into today, 24 hours later. So the trades are there, folks. It's just a matter of, are you reading the charts properly? And if you are, then you're making money. I mean, that's the bottom line to it. So again, folks, inthemoneystocks.com here for you. 7-day free trial to the Research Center, 7-day free trial to the Intraday Stock Chat. Again, the swing trader out there, if you're an investor, swing trader, you're looking at the Research Center. That's the place you want to be. If you're a day trader, if you want intraday analysis, then the Intraday Stock Chat is for you. Alrighty, guys, have a great afternoon. I got to go back to making money here. Good day today. And again, come join us here at inthemoneystocks.com.